section. If you can hear me, let me know in the comment section. All right. If you can hear me, let me know in the comment section. All right. Let me know where you're watching me from. Let me know where you are watching me from. Let me know where you are watching me from. All right. Today we'll be having a great time analyzing the market. All right. Let me know where you're watching me from. Awesome. Let me know where you're watching me from. Okay, Ayodeji. We have Ayodeji from Ibadan. We have Mana from India. We have Daniel from Lagos. Innocent from Asaba, Delta State. Right. Israel from Benue. Okay, Pablo from Asaba. All right. So great. So welcome to today's session where I'll be sharing with you. We'll be taking some live trading session here, analyzing live charts and looking out for opportunities to catch on trends. All right. Yes. So today we'll be analyzing the Euro USD, then we'll move to gold, and then I would open up a suggestion to everyone to tell us what currency would they love to see analyzed. All right, so great. So today we're looking at the Euro USD. First thing first, like I've always said, before you take any position, before you trade, there are a few questions you should ask yourself from the onset. And the questions are: number one, what is the current market structure on a higher time frame? What is the current market structure on a higher time frame? That's the first question you're going to ask yourself. Why should you ask yourself this question? Because it is important to understand what the market structure is, where the market direction is facing. So the market structure, the question, what is the current market structure, is a question that helps you to understand what direction is the market facing. Okay, that is what we want to understand. What direction is the market facing? All right, so great. Let's go straight to mapping out this on the highest time frame. So we go to the highest time frame. Awesome. These are pretty great levels here. So on the higher time frame, let's map out the current level of the market. All right. So let me give it. It can't be white. We need something that makes it conspicuous. Good. Okay. Can we all see that? So the current market structure shows that the market has been in a downtrend. Okay, the market has been in a downtrend, and interestingly, I've broken through some levels to create. Okay, good. Good. Okay, so now what am I doing here is, first I had to draw a line across every level where price had created a footprint, which is this level. We could see price footprint here. This level, we could see another price footprint here. This level, which could across this level, we could see another price footprint here. And it's obvious that the market is on a downtrend when you put in your trend line. All right, the trend line helps us to see the current direction of the market. All right, that is what the trend line helps us to see. So now, from the higher time frame, we have been able to deduce market direction on the monthly time frame. Okay, knowing fully well that it is facing a downtrend like this. All right, now from what we can see, obviously here, now we can see that price had gone. Let me have this drawing. Let me see if I can use this to draw. Okay, wait, I need to change the color of this stuff. Let me change it to red. Okay, good. Now look at what price has done here. Over time, price went up. Price got to this level, all right, which is like the highest level price has gotten to since 2008, and it has never gotten back there even in 2022. Price has never gotten back there, because if you look at this level now, you see that the footprint is on this path. All right, and obviously price has not gotten here for years now. Okay, now you can see what price did here. Then price created a low, went up. So we are seeing a lower low here, because this is the height, right? And then this high is lower to this. Why this high is lower to this? Why this high is lower to this? Why this high is lower to this? And before we got to this place, we saw that as price was moving in a zigzag format downward, right? We saw what price did here. At this point here, we could read that price had once broken through this level, okay, came down, okay. Now price came to test this level, created a footprint, could not break down further, price went up. Price now came down again to that footprint that was already once created. The footprint means that price has once gotten here before, which is what is happening here. So price came here and created another footprint. There was no possibility of breaking down further. What did price do? Price jumped up again. Price came down to that same level, tested the level again, and could not break through it. Price went up, came down again to that same level where there is footprint, all right, and price could not break through it. Okay, then price went up. Now there is something I want you to observe here, is that from the moment price started creating a footprint here at the support level, the weaker the support level. All right, so let's say this support level was weak. All right, it was weak. Now the next support level was weaker. So I will say W raised to power 2, okay, was weaker, right? So because the more price keeps touching that same support level, the weaker the support level. Then price went up, came and touched the support level here again, which makes it weaker than the previous one. So we have price, this one is raised to power 3. So which means this one is 3 times weaker than this one, and this one is 2 times weaker than this one, right? So the more price keeps touching the support level, the weaker the support level becomes. So you see price came here again and it was 3 times weaker than the previous support level. Then price went up and came down again. Now you look at it. So this fourth one now is a support level that is 4 times weaker. All right, this support level is 4 times weaker. So this one is 4 times weaker than this. This is 3 times weaker than this. This is 2 times weaker than this. The weakness starts from here. So the more price touches the support level, the weaker the support level becomes. So you see what now happened here. This level could not take it anymore. All right, this level is the weakest raised to power 5. All right, the weakest raised to power 5. All right, so as you can see, the weakest raised to power 5. Okay, and here we go. Now the weakest raised to power 5, obviously, and it could not take it anymore. What happened? It created room for a breakout. All right, and price broke out this level. You can see the breakout candle. This is the breakout candle here. Let me erase it. Let me get eraser and erase it. Coming. Okay. Let me see if I have access to it. Okay, good. So what I'm going to do is this. Okay. So this level became more weaker and weaker. So you can see the breakout candle in this circle here, and it created the breakout. And what happened? Price broke out. Price started ranging. Let me get my brush. Price started ranging in between these levels, right? And then finally price broke out of this place and went up. It went up to test the initial support turned resistance level, because this was the initial support level. All right, but now it has now turned support, and so it has now turned resistance. Okay, now when it turned resistance, what happens? You can see that price could not break through this level, because this level became a significant level. It was significant because of the previous experience of that level, the previous experience that has happened in that level. Okay, and good. Here we go. Then price came down. All right, and then price went up again to that same level. Now don't forget what I said. The more price keeps touching a particular level, the weaker it is. So this place becomes weakness 1, Okay, this place becomes weakness 2. Okay, so when this place becomes weakness 1 and this one becomes weakness 2, what happens? If price had come down and come back to touch this place, then it becomes weakness 3, and the next one might then lead to a breakout. Okay, but you can see that there was a game changer here and price went further down. Okay, now come back to this place again. We could see price come down to this place and touch this place. This place is weakness 1. So because of this space, I will just be writing it as 1. Then price went up again. All right, price went up again, came down here. This place became weakness 2. Okay, price went up again, came down here. This place became weakness 3. Okay, price is getting weaker. Then price went up, came down to this same level. This place became weakness 4. Don't forget, we are looking at the monthly time frame, so these levels are very, very significant. Write this down. The higher the time frame, the significant the level. The higher the time frame, the significant the level. Then this place is now weakness 5. Okay, that's to tell you that at every level where price keeps touching a particular footprint, the weaker it becomes. So you can see that when price came up here and touched this level, this was weakness 1. Price came here and touched it, this was weakness 2. But price did not come back. All right, so let's go back to keep reading from here. At the support level, price came and touched it at the first support. That was weakness 1. Price came to the second support, weakness 2. Price came to the third support, it became weaker than the second one. The second one is weaker than the first. Price went up, came down to the same level again. That's weakness 4. Now this level is now more weaker than this level 3. This level 3 is weaker than level 2. Level 2 is weaker than level 1. All right, and then price went up again. Okay, someone would have asked, what if at this point here was when we are doing this analysis? The question would have been, we would wait for a breakout. Once there is a breakout, we will short the market. But look at something interesting happened again, and the market went back up and came down to this level. Now if you look at this level closely, you see the breakout candle. Look at the breakout candle. Can you see the breakout candle? It's even it's forming a fully bodied candle. So it is this July, the month of July, that this breakout candle, the price broke out from this support level. You see, it became weaker and price broke out, and now price is on a free fall. Price is on a free fall. If you go through our last week analysis, I talked about this, that if there is a breakout from here, then price would continue to fall. If you were in the session last week, you will remember I said this. And today we are looking at it in a more explicit way right now. So interestingly for us now, it would be a good time to short the market. All right, a good time to short the market. A good time to short the market. So from where I've explained to now, I want to believe you understand what I've said. The support and the resistance level. Okay? Someone is asking, how can I know a breakout candle? All right, I want to erase all this now. Okay, now someone is asking, good. Someone is asking, how do I spot breakout? Okay, how do I spot breakout? So if you look at this level, here, you would see that there is a breakout symbol at this level. All right. Now, when you see a breakout symbol, I want to get to come in. Okay. Boom, 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 boom. So now you will discover that at this level here is where the breakout is. All right, that is where the breakout is. Look at this. Look at this level here. Look at what happened there. So you cannot easily spot a breakout until it happens, but you can only spot the possibility of it happening. All right. So already here from my illustration, when I said the more price touches, let me return that diagram. The more price touches a particular level, the weaker it is. So when you look at this level closely here, this level here, all right, where I'm drawing this, okay, you will discover that you will know that if price keeps coming to this level where it has become weaker and weaker, there is a higher possibility of a breakout. And that is why we are here. It is because of the higher possibility of a breakout. That is why we are here. All right. So that is how to spot a breakout easily. If you want to spot one. All right. If you want to spot one, that is how to spot a breakout easily. So, okay, I need to clean up. Okay, good. So now, just to progress on this. Yeah. So in this market now, we now know that the market has the higher possibility to keep dropping. Why? Because there's a breakout of this level. But don't forget, after every breakout, there is a possibility of a pullback. All right, there's a possibility of a pullback, and because of this possibility of a pullback is why we would wait for the pullback to come back to this session, come back to this level, and then we keep shorting the market. Or you short the market from here, or you wait for a pullback to short the market. Okay. Good. Yes. So I don't know if I've answered your question. Things, how can I get access to it? You can always look through my previous videos, to be able to what is it called, to be able to understand fully what I've said. All right, great. What else again? Can I hold or just sell? So from our analysis, shorting the market is the best option. Yeah, shorting the market is the best option. But never forget, like I said, before you short the market or you long the market, you need to understand and know your exit strategy. All right. So we've understand that there's a breakout here. So this is a breakout candle here. This candle that is just forming, this July candle, is a breakout candle. All right, so let's go to the monthly time frame and see what is popping on the monthly time frame. All right, good. Okay, good. So now you look at what is happening. Look at what is happening closely on the monthly time frame. Good. Yeah, so someone is asking, what is a pullback? What is a pullback? Now, so you look at this now, look at what is happening here. A breakout has occurred. All right, a breakout is let me say is occurring. All right, or has occurred, is currently occurring at this level. If you look at this level, it's already occurring at this level, because this level is a support level that has held on consistently close to 5 touches, 5 price footprint on not just any time frame but on a higher time frame. Don't forget, like I said, the higher the time frame, the significant the levels. So these levels now on a higher time frame is a strong support level, and you can see that though it touched it more than 4 times, making it a weaker support, more weaker and weaker, and finally there is a breakout. Okay, now that there's a breakout, there are 2 things involved. Okay, it's either there's a pullback and then price keeps falling from here, or price continues to fall. However, the pullback might have occurred on a lower time frame. Okay, and that is why we are here. All right, the pullback might have occurred on a lower time frame, and that is why we are here. So you see this here now, we are shorting the market. So let's go to the 4 hours time frame to see more clearly what is happening. Good. So we can see clearly what is happening here. So you can see the breakout candle. So breakout candles are always fully bodied candle. They are fully bodied candle. So you can see this breakout candle now is a fully bodied candle. So price might do a little rally. Price might do a little rally, okay, to this level, all right, or to this level. So it's either price does a little rally to this level and starts pulling back, okay, and starts pulling back, or to this level before it starts pulling back. Okay, so you can decide to, if you are looking to put your stop loss above this level, which depends on your capital, your trading capital, then you might want to wait for it to reverse to this level and you short it. All right, but if you are waiting for more confirmation, you want to wait for it to get here, or even if it crosses this level, then you put your sell order. So when it starts coming down, it triggers and then you are in profit. Okay, good. Yes, I love how Godwin is writing it back in the comment section. You know, like I said, I'll read what I said and that he noted down. He said the higher time frame, the higher the time frame, the significant the levels. That's a great lesson. And I've passed such a great lessons, more than once. The higher the time frame, the significant the level. The more prices touches a particular level, the weaker that level becomes. 1, the higher the time frame, the significant the level. 2, the more prices keeps touching a particular level, the weaker the level becomes. Those are 2 things that you need to take note of. 2 things you need to take note of. Great. So, yes, what would be our SL? So for me, I will set my stop loss above my entry level, or I can set it at the next support level or a bit above my next support or resistance level. So if you look at this one, we are shorting this market, right? So I will set my stop loss at this level. My SL will be here. Okay? And my take profit would be my take profit. Okay, let me look for where I can take profit. I can set my take profit here. Okay, that's when you look at the monthly time frame. Good. When you look at the monthly time frame, so it's okay if your take profit is on the same level here. Okay, that's the next support level, and price will surely come there. You get, price will surely come to this next support level. Let me pick this. I want to show you something. Price would surely come to this support level. Good. So price will surely come to this support level. That is, this level is where your take profit would be. There is where your TL would be. Take profit. So you can set it, your take profit here, level here. So let's go back to the 4 hours chart. Good. So your take profit can be here. Your stop loss is here. Your TL is here. Your TP is here. Your SL is here. All right, that is where you're going to set it, and you short it, and you watch yourself ride in profit, or you edge when the market goes against you. Good. Yes. So yeah, so now let's look at gold, like you have always demanded. Gold. All right, gold. Okay. Let's go to 1 month. All right, so let me know if you are following in the comment section before I proceed. Let me know if you are following in the comment section before I proceed. Let me know in the comment section before I proceed. Let me know in the comment section before I proceed. Are you following? Are you following? Are you following? Are you following? Let me know if you are following in the comment section. Great, great, great. I love the energy. I love the energy. I love the energy. All right, so let's get the ball rolling, guys. Let's get the ball rolling. Let's get the ball rolling. Let's get the ball rolling. Yeah, so this is the gold market. The gold. Awesome. Yeah. Oops, let me delete that. Okay, good. So we want to ask ourselves, the first question I've always asked, and I've always said that we should ask ourselves whenever we want to analyze the market, and that is the question of what is the current market structure? What is the current market structure? Okay. Good. So let's map out key levels. Key levels. These are key levels. Key levels. All right. Good. Now that we have been able to map out key levels, all right, let's understand what price did in these levels. Let's understand what price did in these levels. Okay. We are starting from 2007 when price embarked on a significant journey. Price went up to this level, was resisted, and there was a pullback. When the pullback set in, what did price did again? Price went up. Now you look at this candle here. What did you see? A fully bodied green candle. A fully bodied green candle that served as a breakout candle. It broke out of this resistance level. And what followed next? What followed next? Look closely. What followed next here? If you look closely, you would see, a bearish candle followed next. That is what we call pullback. That is what is called pullback. All right. Good. So if you look at it first, you see the first bullish breakout candle, a fully bodied candle. Every significant breakout candle is a fully bodied candle. Every significant breakout candle is a fully bodied candle. All right. Now, when we have this fully bodied candle, a breakout candle is most likely, there are 80% chances that there would be a pullback. And you can see the next bearish candle was a significant pullback. And this significant pullback, all right, is also very important, because if you miss entering in at this breakout candle, you can enter in when the market pulls back, because you'll be entering at a more discounted price. And after the pullback, we saw price continued its journey up, created a higher high, all-time high, came down, went back up again, but did not get back to this all-time high, and kept going down. This is a support level. It broke out of the support level and kept going down. Went up, touched this level, could not break through it. Then it went down again. Okay? It went up to touch that same other level again. It could not break through it. It went down again. Now, that's to tell you that this is 1. Okay? This is 2. All right? Now, look at what now happens here again. The third one, you can see a breakout candle there already. On the third one, you can see a breakout candle on the third one. Very, very significant. So you see that the more the price keeps touching the same price level, the weaker the level becomes. The weaker the level becomes. And this level 2 is weaker than level 1, because price had previously touched level 1. So why am I saying is weaker than before? So imagine you are given a sledgehammer. You are given a sledgehammer, all right, and you are told to slam it on a particular wall consistently. You keep slamming it on a particular wall consistently. So you took the sledgehammer, you slammed it on the wall. 1. Now, the wall feels the pressure from that sledgehammer, and then it became slightly weak. Now, you won't tell me that the next slamming that you slam that edge, sledgehammer on the wall, what happens? The wall becomes weaker. When you slam the hammer again on that same spot, don't forget you slammed it the first time, you slammed it the second time. If you are slamming it the 4th time, there is a higher possibility that you will begin to see holes on that wall. And the more you slam it, there's a higher possibility that the entire wall will tear into pieces. That is because you've consistently slammed the hammer on the wall. Same thing applies here. So imagine price was slammed against this level, and again was slammed against this level. Apparently, this level is now more weaker than this level, right? And the weaker this level is, okay, the more possibility that there will be a breakout. it is now not a matter of how will there be a breakout. It's a matter of when will there be a breakout. And then you see how the breakout candle showed up and broke out, and then you see the pullback here, a little pullback, and what happens? Price went on steroid and created an all-time high. We can see an all-time high here, an all-time high here. Now I'm gonna delete all this and do something very simple, just so that you all could understand and follow slightly well. So if you look at this now, let's pick up something. Coffee. I was looking for a cough. Okay. Coming. So okay. Yeah. I was going to draw. Okay. I wanted you to see something. I'm not using indicators. Okay, so good. So we can see that there are two curves here. Okay. Now, but when you look closely, all right, now, good. So when you look closely very well, you look at this, because this is the level we are looking at, because this is a monthly time frame. So you see what price did. Price, having moved on steroid, on a bullish steroid, went up, created an all-time high, came down, went up again, touched the all-time high, and it's coming down here. Now, if we're going to use the chart pattern strategy, this is a double top. All right, this is a double top, and a double top is a pattern that signifies it's a reversal pattern. Let me put it that way. A double top is a reversal pattern. All right, that is a double top. It is a reversal pattern. As you can see, a double top is a reversal pattern. So you look at it here, touch this place, came down, touch this place, come down. Then what are the possibility of what we might be seeing or what we might be expecting? That price might fall further to this level. All right, price might fall further to this level. Yeah, this level is fine. price might fall further to this level. Good. And when price falls further to this level, then there might be a reversal pattern, a bullish reversal pattern, or a continuous fall in the price of gold. But there is one thing about gold that needs to be studied. All right, gold is one of the assets that is used to hedge against inflation. Okay, and in times where there are wars, rumors of wars, economic crises, bad interest, when interest rate is going high, and funds are flowing away from the capital market, and other assets becomes less and less attractive because of the macroeconomic environment being unfavorable. Investors, institutions, hedge funds, the smart money considers gold as a safe haven. And that is why in times of crisis, you will always see the price of gold jump up. Now, if you remember, for those who can remember, during 2020, early 2020 period, 2019-2020, that we had the Iraq-US crisis. There was a crisis between Iraq and US, that was what moved the price so strongly up. I actually also made a lot of money from gold at the time. Okay, there was fears that there was going to be, war, that action will lead to war, blah blah blah, and the likes like that. And currently now we have a lot of crises, globally, and some unfavorable macroeconomic environment, geopolitical crisis. The Ukraine-Russia war is not left out of it. The US inflation is not left out of it. The inflation plaguing Europe, Asia is not left out of it. The fear of pandemic, the little rumors of pandemic is still there. All right. So these factors can create a turnaround for gold as gold becomes more attractive. So you need to be careful when trading gold. All right, and have 80% risk management techniques. Okay, so but from this analysis, there are chances that gold should be dropping from a technical standpoint. All right, so let's go to the weekly time frame. Good. So I want to believe you guys are getting value from this session and you are learning a lot. You are learning a lot. Okay, so he said, Wisdom said, what would we do when there is an aggressive fall in price without a pullback? You wait. So if there's an aggressive fall in price without a pullback and it is obvious that price will keep falling, then you can short the market. But if you don't, if price is just falling and you don't know if price is going to bounce up or price is going to keep falling, it is better to stay out of the market. A safe fund is better than a safe fund, waiting patiently for the right opportunity is better than, a large fund jumping on trades. Okay, because it is, let me tell you something, it is not about how many trades you have taken. Okay, it is about which of these trades are significantly making profit. And you don't have to be on every trade. You don't have to jump on every trade if there is no clear-cut indicator, all right, that tells you to buy or to sell. Okay, if there are no indication from the market, if the price action is saying it's not clear, it's better to stay out of the market. All right, you don't have to always be trading. You don't have to always buy and sell. All right, but when you wait for opportunities to show up, and when these opportunities show up, you jump on them, that's golden. Okay, but every time you feel, oh, it is going down, let me sell, it is going up, let me buy, without having a significant reason, without having your exit and entry strategy well cut out, you would always lose money in the market. All right, you would always lose money in the market. Yeah. Someone said during crisis, as you said, is it that gold market don't even go bearish? No, it's not like gold market don't go bearish, but when the market is becoming unfavorable, when the stock market is becoming unfavorable, when other assets are failing, right? Gold is always regarded as the safe haven, all right, as the asset that is used to hedge against inflation. Okay, and that is why it becomes more attractive to investors in hard times, in times where there are wars, in times where there are rumors of wars and the likes like that. All right. So I believe you guys have gotten value from this session. If you have gotten so much value from this session, let me know in the comment section. If you want us to keep having sessions like this, giving you live trading analysis, let us know in the comment section. And if you have not started following, subscribe to our YouTube channel now. Click the subscribe button, click on the notification bell, and be the first person to get live informations. All right, be the first person to get live informations when we are about to go live and put you through some live trading sessions or some educative content. If you find this session very informative, if you find this session very enlightening, if you want more of this, let me know in the comment section right now. If you've gotten value, let me know in the comment section right now. Okay, I'm waiting for you. I'm waiting for you. I'm waiting for you. I'm waiting for you. Are you getting value from this session? Do you want more of this? Do you want Octa FX to keep putting out educative content? All right, let us know in the comment section. Great, I can see Wisdom. All right, thank you. Wisdom has been following. Williams have been following. Yeah, Okolo has been following. Aura has been following. Awesome. Oh, someone said I've been trading for 4 years now. I have to say I have learned a lot. I have a lot to learn more. Yeah, a lot to learn. A lot. Great. So guys, thank you very much for joining me and joining Octa FX today on this live trading session. Every Thursday we are here to feed you with educative content. Do well to always join us in our next session when we meet on Thursday next week. I look forward to seeing you guys next week. Thank you and God